Hi, this is Mark, just with a brief midweek update. Now, I showed you on Sunday, and I explained again yesterday in the live training session. I looked on Sunday at the pound, and the pound had stopped very frustratingly at 130, just sat on it to the pip. And therefore, I was wary about shorting it. And the reason why I was wary about shorting it, I had nowhere to put my stop. And my stop is equally as important as the entry. Anybody can pick a decent entry, but if you don't get the risk management right, you will never make any money at this game. And the issue for me here, I want multiple reasons for a place to put my stop, and I don't have multiple reasons. There may be a pivot, there may be the odd fib or the odd indicator, but nothing specific that would work. Now, as it is, this has worked reasonably well so far. However, I explained on Sunday, as a result of which I was going off to look at the cross pairs, because this is a scenario when you get a situation where suddenly lots of potential trades all arrive at once, you have to decide which is the better one to take. And I looked at the pound Aussie dollar, and the pound Aussie dollar had broken a weekly trend line. This triangle is 800 pips deep, and if it can clear this area here, there's nothing technically in the way of this going a long way. And clearly it is driven by the pound. The reason why I liked this was the risk-reward ratio, and you either could go just the other side of this weekly 55 and the whole number, 10 pips above the whole number, so it's a 30 odd pip risk, and to come down to the recent low is 190 pips away, so it's a 1 to almost 7 risk-reward ratio. Now, having got into it, what do you do next? My thinking is, as I said, I think it's going to struggle here, but if it can get past here, this can go a long way. So I was discussing this with a student yesterday, and we went through various scenarios. One scenario is you take part of the trade off. So yesterday when we were looking at this, price was down here. So at that point, he's made 3-4 times the risk. So if you take half off, then he's left with a net gain of 2 times the risk. Move the stop lower down and let the thing run is an option. Another option is to trail the stop down, and you can either use the trade manager, follow it down on a daily, or follow it down on a 4-hour. So on a 4-hour, initially we moved it to here, and now to here above this recent camera. Clearly price is now consolidating but trying to make a new low. If this makes a new low, and bear in mind that the average range is 128 pips and it's done 50 so far, so it needs to go either another 60-70 that way or that way. But if it makes new lows, then drag your stop down behind this range, and then you've locked in 116 on the balance, and you still have the chance of this thing going a long way. So the thinking was it was a far better risk-reward ratio, which was why I went for it in the end. It's still getting dragged down by the pound weakness, which I've been talking about for weeks and weeks. I expected the pound to drop, and it has done so, and a lot of this is to do with the Brexit situation. And then you look at other pairs. The pound New Zealand was in the middle of nowhere, really. I am interested with the pound New Zealand for a bounce back up, and now my preferred area is back down here, so maybe half the order here, and certainly I would be interested to long at 190. This one I wouldn't make a decision until it gets there, and then you have to watch the pound in general. What is it doing against the dollar and all the other cross pairs? Just keep your eye on what's going on. Final ones, the euro pound. It's finally made a move. Frustrating as heck last week. I was in it all week and it went nowhere. Now the damn thing's set off. I would not take it in its current position. It is coming up to 90. It tends to stop at the whole numbers. If it got up to 90 today, that will be an average day's range, and therefore I don't have any risk reward again. Where am I going to place the stop for this trade? You're looking, if you'd taken it here, a potential gain of 46 pips, and you're looking, well, where are you going to place your stop? So for me, more interested to potentially swing trade it back down again, and if you're going to do that, then go off and have a look at Pierre's method. Okay, catch you later.